A lot of you have been asking about SoFi. Is it a bank? Is it a tech company? Is it a buy, a sell, or a hold? We're going to cut through the noise and give you the real-time, actionable insights you need as of August 19, 2025. Forget the static reports. We're talking about a live pulse check on a company that's rapidly evolving. Let's dive right in. SoFi's stock price and live market action as of August 19, 2025 during U.S. market hours. Current price. SoFi is trading at approximately $23.32. This is a day where we're seeing some volatility. The stock opened higher at $24.61 but has since retreated, down over 3% on the day. Daily range. Today's high was $24.91 and the low was $22.84. This kind of movement isn't for the faint of heart, but it's part of the game with growth stocks. 52-week range. The bigger picture is what matters. SoFi has traded from a low of $6.75 to a high of $25.11 over the past year. This stock has seen a massive run-up, more than a 200% gain in the last 12 months, and it's currently sitting near its 52-week high. This performance is a testament to the company's recent operational success and investor enthusiasm. The why behind the movement. Key updates and news flow. The market is a forward-looking machine. The price today is a reflection of recent news, and there have been some major developments. New blockchain-powered remittance service. Just today, SoFi announced a new international money transfer service in partnership with a crypto infrastructure provider, Lightspark. This isn't just a minor update. It's a significant move that makes SoFi one of the first U.S. banks to offer a blockchain-powered remittance service. This news positions SoFi as a fintech innovator, leaning into the very technology that a lot of traditional banks are still wary of. They're not just re-entering crypto trading, they're building new financial rails. This is a long-term play for global payments and could be a major differentiator. Re-entry into crypto and Web3. This new remittance service follows up on a previous announcement in June about SoFi's re-entry into crypto investment. This is a calculated bet. With their federal bank license, they believe they have a structural advantage over pure-play crypto platforms. They're not just offering trading. Their CEO, Anthony Noto, has talked about plans for stablecoin issuance and crypto-backed loans. SoFi is actively positioning itself as a key player in financial Web3. Recent public offering of common stock. You might have seen headlines about a public offering of common stock at the end of July. This is a move to raise capital. For a growth company, raising money to fund operations and expansion is a normal part of the life cycle. However, it does lead to dilution of existing shares, which can sometimes put temporary pressure on the stock price. It's a trade-off. More capital for growth, but more shares outstanding. The Financial Report Card. Q2 2025 Deep Dive. The most significant event for SoFi in the last few weeks was their Q2 2025 earnings report, released on July 29. This is where we get a clear picture of the company's health. GAAP net revenue, a record $854.9 million, a 43% increase year over year. This is a crucial metric. It shows the company isn't just growing, it's accelerating its growth. Adjusted EBITDA, another record, up 81% to $249 million. This shows they're not just growing revenue, they're becoming more efficient and more profitable. Net income. SoFi reported a net income of $97 million, a massive 459% increase year over year. This is a game changer. SoFi is now consistently profitable on a GAAP basis. This is what Wall Street was waiting for. Membership and product growth. Membership grew by a record 850. Zero new members, a 34% increase, bringing the total to 11.7 million. Product growth was also up 34% to 17.1 million products. This is the cornerstone of SoFi's flywheel strategy. The more members they have, the more products they can cross-sell, which drives revenue from multiple sources. Raised guidance. Following these results, management raised their 2025 guidance. This is a huge vote of confidence from the company itself. They're saying they expect to exceed previous targets. This is exactly what investors want to see from a growth company. SoFi's business model, the all-in-one financial hub. To understand SoFi stock, you have to understand its business model. It's not just a lender. It's a full-stack, direct-to-consumer financial services platform. Lending. This is the legacy business. Student loan refinancing, personal loans, and home loans. This still generates a significant portion of their revenue, primarily through interest income and loan origination fees. Financial services. This is the growth engine. This segment includes SoFi Money, checking and savings, SoFi Invest, brokerage, robo-advisory, and now crypto and credit cards. SoFi makes money here through transaction fees, subscription fees for services like their robo-advisor, and payment for order flow. The strategy here is to acquire members with one product and cross-sell them into the entire suite. Technology platform. Galileo. This is the B2B side of the business. Galileo is a core banking technology provider that powers other fintechs and financial institutions. SoFi acquired Galileo, and this segment provides a high-margin, recurring revenue stream. It's an often overlooked but incredibly valuable part of their business. This diversified revenue model is what makes SoFi different from a traditional bank. The company is less reliant on just one revenue stream, which provides resilience in different economic environments. Analyst and expert consensus. What are the professionals saying? Overall consensus. The general consensus among analysts is a hold. While some have a buy rating, the distribution is fairly even, with a significant number of hold and sell ratings as well. Price targets. The average price target for SoFi is around $19.50, but with a wide range. The high estimate is $27 and the low is $6. This wide range reflects the uncertainty and different perspectives on the company's valuation. It's a reminder that SoFi is a story stock, and its future performance is heavily dependent on execution. It's important to note that the current stock price of over $23 is already above the average analyst price target, which suggests some analysts may be behind the curve on their ratings, or that the stock is currently trading at a premium. The valuation debate. Why is SoFi so highly valued? P/E ratio. SoFi's price to earnings. P/E ratio is currently around 47. This is extremely high for a traditional bank. The average P/E for the financial sector is much lower. This is because the market is not valuing SoFi as a bank. It's valuing it as a high-growth tech company. Growth premium. Investors are paying a premium for SoFi's high growth rates, with adjusted net revenue up 44% and membership growing at 34% year over year. The market believes SoFi can continue to grow into its valuation. The long-term thesis is that SoFi will take significant market share from traditional financial institutions. Future potential. Over 90% of Americans are still unfamiliar with SoFi. This tells you there is a massive runway for growth. If SoFi can continue its marketing efforts and product innovation, its user base and revenue could expand exponentially. Risks and challenges. No investment is without risk. For SoFi, a few key things to watch are competition. The financial services market is incredibly crowded. SoFi competes with traditional banks, other fintechs, and even big tech companies entering the space. Regulatory environment. As a bank, SoFi is subject to stricter regulations. Any adverse regulatory changes could impact its business model and profitability. Economic conditions. A significant economic downturn could lead to higher loan defaults, which would hurt SoFi's lending business. The company has a lower risk customer base, but no one is immune. High valuation. As mentioned, the stock is trading at a premium. If SoFi fails to meet its aggressive growth targets in the coming quarters, the stock could see a significant correction. The final word for investors. So, what should you do with SoFi stock? This isn't a simple buy, sell, or hold. For the long-term investor, if you believe in the vision of a one-stop-shop digital financial platform, and you're comfortable with a higher valuation for the sake of high growth potential, SoFi could be a core holding. The company is executing on its strategy, becoming consistently profitable, and expanding into new, high-growth areas like crypto and global payments. The long-term story is compelling. For the value investor, if you are a strict value investor and only look at traditional metrics like P/E, SoFi is likely not a stock for you right now. It is priced for perfection, and there are many risks. For the active trader, the stock is volatile and news-driven. This can create opportunities for short-term trades, but it also carries significant risk. You need to be on top of every piece of news and every earnings report. The market's reaction today shows that even with a strong long-term story, the journey will be bumpy. But don't let a single day's movement distract you from the bigger picture. SoFi has transformed from a speculative SPAC into a real business with a bank charter and a clear path to profitability. The question now is not if they will grow, but how fast and how far they can go. Pay close attention to the member